get that collateral in the 200% level to acquire the USDL. So I would probably go that road as well to get the USDL outside on PLSX whenever it becomes available. But then for that to go into the stability pool, is there also the minimum of the 2000 USDL, or
No,
there I can do
any amount. You
value?
can deposit any amount into the stability pool. So that's the beauty. The 2000 minimum is just to mint
For
and
to get the
open a
mint?
new
Yeah,
vault.
exactly.
But
So, but if I go,
if you buy USDL from Pulsex on the open market, whether it's 5, 10, 20, whatever you can afford, you can just bring that straight over and deposit that straight into the stability pool to start earning rewards. So, that's the beauty, that there's no discrimination when it comes to the stability pool and the loan staking. The minimum criteria, the 2000, is just for opening a vault. So if you never ever have to open a vault. If you never want to, you can just buy USDL and loan off the open market and, go into the stability pool and loan staking straight away. You can do it that way, which a lot of people will. That's, part of some people. Some people don't want that risk of losing the pulse through liquidations, etc. They just want to play the stablecoin game or the passive income staking game, but that's perfectly fine. That's how this ecosystem's set up to reward. Anybody can come in and use it either way based on their individual situation and strategy. So yeah, you're perfect, no issue. If you can't afford to mint the 2000 minimum, yeah, but for argument's sake, you've only got the 1500. Say, yeah, go buy the USDL and then deposit it, and once you've got enough loan tokens accumulated, stake your loan, and there you go. You're part of the ecosystem. Then you're earning loan as rewards. You're earning USDL and Pulse as rewards. So it's a
yeah,
win-win.
no, I'm testing it on the testnet. It's like cool. I like it. Yeah, this now is just a game, but on testnet. But yeah, no, it works
It's a game, but
perfect.
you got to learn how to play it.
It's amazing.
Ultimately,
So yeah,
it,
the only thing I was worried like how I'm gonna provide that cash for the mint. But
you
if
just have
that's
to,
not, if I will
yeah,
have to wait obviously a couple of days for that
yeah,
pool to
you
open
just got to learn how
somewhere.
to click the buttons in the right order.
And
That's
yeah,
the game.
but yeah, great, thank you. Yeah, amazing. Cheers.
No problem.
I imagine you'll see people in the liquidity providing pool on Pulsex pretty much immediately. I don't see, as soon as it's out there in the wild, people will be jumping in to get the reward. So you just have to make sure you keep an eye on the rate, right? Make sure the stability token it can fluctuate in the liquidity pool. So you just want to keep an eye on that and see, make sure it's not too much worth less than the dollar's worth of pulse, right? Because there's arbitrage that's going to be taken advantage of in the beginning. For the first 2 weeks of the protocol, there's no redemptions. So the market needs to flush itself out on its own. So there's going to be a lot of arbitrage that happens in that pool as an LP when you're providing LP as well. That's another advantage of the LP pool in the beginning too. So you can participate in the LP pool as well, or you can participate in the stability pool in order to get rewards for loan.
Yeah, but how? Which? So you're saying like if there is because there is an LP pool on liquid loans, but there will be an LP pool on Pulsex, let's say. So you're talking about that arbitrage, yeah?
The LP that's incentivized is the one that's on Pulsex. So if you go to the LP rewards tab or page on the DApp, it'll lead you to the Pulsex pool that is
Yeah. No, I
incentivized.
tried that. I tried that. Yeah.
Yeah.
But now
So
with testnet, it
that's what I'm
says
saying.
that
Yeah.
I didn't provide enough liquidity. So I guess it's
Did you provide any?
Yeah. No, I basically, I think I did, or I stopped and I started to listen to this. I need to go and check again. Yeah, no, I did. I minted the LPLs, and then when I went
Yep.
back to liquid loans, it tells me my balance. So I tap it like 100%, but it says in
Yep.
red like there is not enough.
Well,
You are not having enough.
yeah, right below that though, right below that statement, that statement says you haven't approved enough tokens, right? Or PLP or whatever the case may be.
Oh yeah,
And
okay. So then I just
all you
need to
need to
approve
do,
it.
yeah, that's right, just approve it. And then what happens is, because that token is another contract, another ERC20 contract, that you have to approve the allowance to spend, right? Or to
Yeah,
move.
of course, you're right, and I have to
Yeah.
return Twice. Yeah,
Yep.
okay, because I thought that I've done it. Oh, yeah, of course. Yes. So I do it
Yes,
once
it's a
I get off
two-step
this call.
process. Yep,
Yes,
two-step
yes, of
process
course.
to stake and a one-step process to unstake.
Yes, yes. So yeah, okay. So and then where is so you would arbitrage where?
Well, the arbitrage will be happening on the pool. People buying it for when people sell, the price of that pool is going to come down, right? But in order for people to arbitrage, they're going to have to buy it, right? They're going to buy it back up. And the people that are providing LP are going to be getting fees for every time that happens when people are trying to even that pool back out. Because once redemption's open in 2 weeks, 14 days after the protocol starts, people can redeem those USDL to the protocol itself. So if you can get them at a discount on the LP or on the liquidity pool on Pulsex for those first 2 weeks, you can hold them and wait, or you can sell them when if the LP pool goes over value. So say you grab them at, let's say, 90 cents. For some reason, people sell a whole bunch and it goes down to 90 cents. You buy it up to 95 cents, so you get an average of like 92 and a half cents, right? But then it goes up to $1.05. It goes the other way because people are, it just goes to the opposite side, and then you sell down. So now you're gaining pulse, you're gaining that difference. If not, say you're just part of the LP, then you're gaining from people doing that. You're just getting fees every time people are
Yeah, no,
arbitraging
I
that
would probably settle on that one. So I would just probably, and just because it should be like stable coin, so the price difference should not be that bad. The only thing I'm
Well, in the
worried
first
about,
two
like, is the
weeks,
pulse.
Yeah, the first 2 weeks, though, there's no redemptions on the protocol itself, which means people can't bring a token that they got for less and get the right amount of pulse, which helps even out that pool
Ooh,
quickly, right? So
okay.
people will have to arbitrage that in the first 2 weeks, which means if you're a provider, you're going to be benefiting from people trading on that pool more than they normally would.
Oh yeah, because of that single pool arbitrage is basically I'll just sell it because I got it cheaper, and then I'll just, or well, basically, yeah, the other way around.
Yes.
Yeah.
Yep.
So they will be just like day
Yeah,
trading basically.
when people want to buy that token, and let's just say it's at $1, right? The USDL happens to be worth $1 on Pulsex. Well, you come in with $1,000 and you want to buy it. Well, you're going to be pushing the price up slightly,
Yeah,
depending on how
exactly.
much, right? So you're going to push it up slightly, and somebody else is going to push it back down. So every time it gets pushed up, it's going to be pushed down. Every time it gets pushed down, it's going to be pushed up.
Oh, yeah. Hopefully someone is gonna deploy a bot, but after I just do some liquidity on it.
Yeah, of course. Yeah. But that's what I'm saying. You can benefit from being the provider as well,
Yeah, I'll probably stick to that
and
rather than that day trading. Yeah, I hate it. I will eventually end up
or
like doing the opposite way.
yep, or the stability
Buy
pool.
high, sell low, and eventually
Yeah.
deplete my
Yeah,
PLS.
that's a game for people that want to play it. Yep.
Yeah.
Stability pool is less risk. That's all.
Yeah, no, that's what I would probably do. I'll just get as much USDL as I can buy on PLSX, on PulseX, get it into the stability pool, and then if I want to play more, I just basically join that liquidity pool, just provide liquidity with PLS and USDL, whatever I got left.
I know there's a lot of people, I know that they've got strategies where the pulse that they gain through liquidations, because don't forget, every time a vault gets liquidated, stability pool, that pulse is distributed amongst the everybody that's in the stability pool. So you then
Yeah,
receive that pulse at a 10% discount effectively compared to the market
yeah,
price at that moment. So a lot of people, they will be using other front end smart contracts, etc., where they will instantly swap that gained pulse for USDL and deposit it back in again to the stability pool. So that's another mini arbitrage opportunity of sorts that people will be taking advantage of in that way.
yeah. That
Obviously,
will have to be done quickly, wouldn't it?
it creates sell pressure on the pulse token itself by people doing that. But like I said, there are people who want to just stay in stables and not suffer the volatility, and that's fine. It's a free market; they're entitled to do that. But yeah, once we launch, I mean, there's a lot of other projects, front ends that are going to be be building on top and utilizing the protocol, and we'll get to hear about those. But it's ultimately, again, liquid loans is the underlying protocol that everybody else, all these front ends will use. So whatever they're doing, they're still bringing in users. They're bringing in more users equals more fees for the loan stakers. So it's still a win-win, whichever way you look at it.
No, yeah.
Real
Well,
DeFi, Field is about to get real on Pulsechain.
Well, I
This
mean,
week.
that's what's great about what we're doing is liquid loans contracts be integrated in with other people's projects into the contracts, and then other contracts can call other contracts, and the composability of like a layer one is like that's like the cool stuff, right? Like that's the cool stuff right there. Building something that works, that's not a rug pull, that references other contracts that do cool things. Like that's awesome. Fetch has to exist before liquid loans exist. Crypto Crazy said that liquid loans will launch in October, so before liquid loans launches, Fetch has to launch.
Makes sense.
So some time period, right? So at some point before liquid loans launches, Fetch is going to launch.
2 weeks. It's always 2 weeks.
You see how I didn't give any like not even a vague reference to any time frame there, because that's like literally I have no idea anyway.
Hey, Gamma,
very
how many community reporters are going to be required before liquid loans can launch, or can they launch without community reporters?
Well, the Fetch reporting, I mean, the Fetch network, like here, so like Pulsechain launched, it launched with the developers of Pulsechain running validators. And then at some point after it launched, then the community could be a validator, a blockchain validator. Fetch is the same way, right? It launches with the developers being Fetch reporters. It exists, and then then after that, it's the community can be Fetch reporters. Like, what's the time frame for that? I can't say. But similar to launching a blockchain with all the clients, Fetch also has to exist with the developers running it to make sure that it actually functions correctly, right? And then after everything's good, then the community could run reporters. And so that's like an update, an announcement that cryptocurrency would have to make. But but the logic makes it sound right. Like it's not like super secret or anything. The Fetch reporter developers would have to like create the thing, launch the thing, run it, make sure everything is working great, and then after that, at some point, the community could be Fetch reported.
Liquid Loans is running on testnet without community reporters currently.
And there's that, because liquid loans just requires a price feed, an accurate price feed.
Yeah, took the words out of my mouth. And that's why we've got, what's the price of Hex right now on testnet? 200 and something?
Well, people do crazy things on testnet.
I do have a question, totally unrelated, but it is Pulsechain related. Last night, apparently, the gas fees spiked really, really high. Do we know why that happened?
People were filling blocks up with transactions, spending money on transactions. Gas fees are dictated by usage of the chain. So that use of the chain could be like a project launching and you fill up block space. It could be a lot of reasons why users would want to send transactions from one person to another, or do an exchange, or do whatever. Gas fees are completely dictated by use of the chain, and so the actual project or whatever that caused people's behavior to be such that they use the chain for its intended purpose and actually spent money on transactions. I actually have no idea, nor do I really care, as long as it works, right? As long as people can do transactions and it makes sense, and you pay the slightly above the estimated rate for that's which is normally what gets people. This is like a transaction thing. People get stuck transactions, and there have been a lot of people in the last couple of days who have gotten stuck transactions, and it's because they're not paying enough in gas. So they're paying the minimum, hoping that they're going to get their transaction through, and then gas prices go up slightly or a lot, and then now their transaction's stuck, and then they have to go through the process. As everybody who works on EVM chains will eventually need to learn how do you unstuck stuck transactions. It's actually not that hard, but you got to learn how to do it. So, and that's probably because of the gas price spike that happened yesterday.
There was a coin that launched last night, and I went to obviously buy it. Not myself, but a lot of people bought. I had, at least 5 failed transactions on Pulsex at aggressive speed, gas limit, aggressive. And not just me, but multiple people that I know, we all had it. And then I saw some tweet earlier today, and even Deva from 9mm, the Block Explorer, he was on testnet doing some updates, and even on testnet, they experienced massive spikes of gas as well. So it's like
Yeah. So okay, if there's a project launches and then if the if a project launches and it spikes gas prices above say 10-20% in a couple blocks, which is very likely, then the estimates you're going to get in MetaMask are going to be wrong, very wrong. So if you know there's going to be something launched or use, and you know there's a bunch of people who are going to use the chain, you should act accordingly, and you should increase your own gas probably much higher, because understand that MetaMask uses on-chain data to estimate gas. So the estimates could be wrong if, say, a bunch of people slam a couple blocks with transactions, and then all of a sudden the information the MetaMask has from the blockchain estimate gas will be wrong, because it's using historical data and not, it doesn't get like the future price of gas, it gets the past. And if the past is like not anywhere close to the present, then you're gonna get failed transactions because you're not paying enough in gas. You know what I mean? It just estimate gas price in MetaMask isn't foolproof, which we all know. I mean, it literally uses the last block that was published, the gas price, like it's using the past to dictate the present. Like I said, and it's like that's always not always correct, especially if the current blocks that are being produced, the current epoch of set of 32 blocks that are being produced, those gas prices to like the competition to be in those blocks is super high. So people are just throwing money at transactions, and then you're trying to pay, even the aggressive amount, but everyone else is paying 10x times gas prices to put their transactions in, right? And then you're going to be priced out, and it's going to happen.
Hey, Hotwell, see you down there. How are you?
Hey, how you doing? I'm just listening in.
Good. Not spoke to you for a long time. How are you? How's life?
Oh, it's pretty good. I'm just I'm more on Telegram than Twitter now, just looking at different things. And I know Liquid Loans is going to launch soon in the fetch stuff. I'm just trying to be up to date, I guess, with everything. I've got testnet, got a little bit prepared. So, I'm excited.
Getting back into the hardball strategy?
Oh, yes, I am.
One of my strategies. Actually, I did see a couple of days ago in Georgia, and was it Raquel, the ladies on YouTube?
Oh, yeah. No, I stream with Claz pretty regularly, and it's kind of keeps me on my toes, I guess. And, hi, Hepsy. I just saw him come in here. So, yeah, this is exciting.
Lion is in the house. We got lots of Pulse Pussycats these days, I'm telling you. But you'll always be the OG for me.
Everybody.
How you doing, buddy? The line goes from strength to strength. I remember that advert for the Peugeot cars. Feels like we're back at the Pulsechain launch and Liquid Loan Sacrifice. Those days, buzzing again, juicing it up on the timelines.
Yeah, it's been a while since I've seen the chat open.
Yeah. I was just saying that earlier. I was on another group. Bullish posted the message in the Tangang group. It was like, yeah, CC's YouTube video. I was like, shit, gotta go, guys. See ya. Come in the group. Walrus is already in the chat answering questions, and I saw the voice chat. There's about 20 odd people. I thought, oh, here we go. It's on. It's on like Donkey Kong.
That's what happens when it happens when you sacrifice $50 million, man. It tends to attract people.
Yeah, that's true. It's still been a big selling point. I mean, outside of Pulse and Pulsex, I think we're still the highest amount of sacrifice for a project, third-party project. Itself obviously shows the support obviously the community have, but also the faith that the community had behind CC and Ambra and Dave, etc., and the whole team. Ultimately, and that's always been I was saying this to somebody yesterday. Regardless of where I go in the ecosystem, Liquid Loans will always be my home. It's where I've learned what I know and what's enabled me to go out and do what I do now. So, and it's central to my profit take strategy. Always has been for the last year and a half, and always will. I mean, April, when NFT drop?
When NFT drop? It depends on what I do. I'm thinking about stuff, but I don't know.
I'm excited to say the least. After Mana's drop,
very clear. All I know is there's probably going to be adminning to be done when this launches. So just mental preparation mode.
So the synapses are buzzing again. That clicking is happening again for the third time, I think. Getting the strategies all, getting the ducks in a row, basically.
Getting all the wallets ready. Oh yeah, it's happening, brothers.
All right, guys, I'm going to love yous and leave yous. I shall speak to you guys on the other side. Take care.
Have an awesome day.
I will do. Well, nighttime prayer and to bed. School on in the morning. See you on the other side. Take care, everyone. Good night.
Later, Nos.
I have a question.
There are answers to those who seek.
Okay, so earlier I was a little fuzzy with the whole redemption thing. Walrus walked me through it real nicely, but I walked away with a little bit more understanding of when USDL may be trading at 80 cents, I can redeem it for my pulse. Basically, I'm getting 100%, basically getting pulse at 80 cents on the dollar, if I understood that right. And there's an incentive for the community to do those things or jump on top of those things, because in and of itself creates the pegging or creates the stability. Did I get that right? Yes.
I could jump in. Yeah, absolutely. Yeah. So if it's trading at 80 cents, you could go out and buy it on the open market at 80 cents. And then using the protocol, you can redeem it for $1 worth of pulse. One USDL.
Okay. Yeah. Oh,
one USDL always equals $1 a pulse.
So when I redeem, I'm redeeming my pulse and getting USDL?
One USDL you're redeeming and you're getting pulse.
Pulse. Okay, so if USDL is trading at 80 cents, and I'm exaggerating it, but for illustrative purposes only, I would go and I would cash in 1 unit of USDL, which is worth 80 cents, and I would get the equivalent amount of pulse, right? Or a dollar's worth of pulse. Sorry.
Yeah, you would just buy on like Pulsex. You know, you fund it however you want, and then you trade for USDL, so you're getting it at a discount essentially. 80 cents would be amazing. And then say you do it for like 100,000, then you would be able to take 100,000, or let's make it normal, $100. So you get 100 USDL for $80, and then you could go back and you get $100 worth of pulse for it by redeeming it.
Okay, now let's go the flip side. And if USDL is at $1.20, right? What would be the incentive? What's happening on the other side if USDL is trading at $1.20? I'm losing ground on my pulse acquisition. Therefore, why would I be incentivized to interact with the redemption function?
Yeah, you wouldn't redeem when it's higher. Because you would, like you said, you'd only get $1's worth if you redeemed at $1.25. But there's arbitrage opportunities where, you know, people that go out and they trade and they look for these price differences and these spreads, they could go out and play one against the other and just flip from one coin to the other. It's like when Pulsechain launched, like you could find all these crazy different pairs because of the liquidity, and you could swap for like, you know, discounts on one to the other.
Yeah, but usually ratio trading and the disparity is when you're looking at a volatile to a volatile. Where I'm trying to wrap my mind around is this is supposed to be a stable, right? And the stable gets depegged every once in a while. Okay, so when the depeg falls lower, that would play into your favor. You would be able to acquire more pulse for 80 cents on the dollar. But when the depeg gets higher, I'm like, why would anybody want to redeem? Therefore, using the redemption function to be the kind of auto balancing to make sure that USDL pegs back to $1. Why would anybody want to use it on the top side? If that makes sense, am I getting too too in the weeds?
Well, at that point, you basically add more pulse and you take out a loan because you're getting $1.25's worth every time you take out a loan. That encourages more people to take loans out, and then that essentially balances.
Okay. Yeah. Plow more pulse into the borrow, pop out more USDL, trading at $1.20. Let's go the other side, and all of a sudden you're running around with $1.20 worth of USDL, and now you can go purchase more loan, sell it, go trade the fiat. Okay. And I know I'm exaggerating the extremes there, but I think Walrus was saying, you know what, when people get into hundreds of thousands and millions of dollars and it's off by even fractions of a percent, people play that arbitrage all day long.
I mean, it's happened before. I mean, you don't want to see pegs that much. Usually it'll be something like if it goes down to 95 cents, that'd be a big spread. But, you know, there's people arbitraging even when it's just one below or 98 cents. So, yeah, there are opportunities out there, absolutely. But it's a beautiful protocol, the way they designed it.
So the protocol recognizes that it could get out of balance, and then this is a feature to entice people on whatever side you are out of balance to get in, and in and of itself forces it to go balanced again. That seems like the beauty of it. You were elaborating.
Yeah, it would encourage you to go out and take more loans, and then that would bring the price down closer back to $1.
Did we see any of that action in testnet, or is the funny money's too wild to even see if there's any? Because I'm seeing USDL $2.20, so that's out of whack. Pulse is trading for $1.50, so that's out of whack. So
I remember it being a little off at times, and you'd be able to make plays and stuff. I haven't played on testnet in a long time, so with this news, I'm going to go refresh it again and check out the new version. Obviously, it's coming out soon, so it's good to practice. But yeah, I mean, you can definitely go on there, and that's what I would do. And I'd go practice the liquidity pool stuff, the LP token, because there's going to be opportunities there to get more loan token just by providing liquidity. And just learn how to use the stability pool and the staking pool, so you can earn in there as well. Because you don't even have to take loans. Some people don't want to deal with loans and worry about being liquidated, like hard pearl strategy. So if you just go and you just put your USDL in the stability pool, you can earn Pulse and loan token that way. And the staking pool, you just put your loan token in, and you earn USDL and then small amounts of Pulse from the transactions. So
yeah, I was talking out loud earlier. Even this whole $2,000 minimum means that if I want to keep a 200% ratio, I've got to come to the table with about 100 million Pulse, 90 to 100 million Pulse, right? Which some of us may have and some of us may not have, and it seems extremely large amount to have to check in and play the game. Now, one day when Pulse is worth $1 or Pulse is even worth a penny, that $2,000 will dwarf, right? It'll look like nothing. But right now, to take 100 million Pulse, right? And if you're looking for 200%, right? 100 million Pulse is worth $4,000-ish. And if you want to be at 200%, you're going to be $4,000 and then loan out $2,000. That seems big, extreme, and very, stretched. So my inkling is just go take $1,000 or $2,000 and go buy some USDL just go buy it on Pulsex. And now I come to the table, plow it into the stability pool, and get the tickers all ticking.
Yeah, absolutely. And then you'll get loan token from that, and then just start putting that in the staking pool, and then you'll be earning on both of them until you're ready.
Yes,
like you said.
While my airdrop loan is also in the staking pool, kicking out USDL, but I don't know how fast that USDL will be coming out of my loan staking pool, but whatever it is, you can keep skimming a little bit each day and keep circulating it and plowing it in. But the 2,000, did anybody else on the chat feel like the barrier, a little bit of a barrier to entry, tying up 100 million Pulse? Yeah, 100 million Pulse, right? With that 2,000.
Yeah, everybody comes from different scenarios, so that's something for you to decide. But yeah, it is a $2,000 minimum in the protocol of debt at all times. But that includes like the $200 reserve fee, or I can't remember. I've been out so far away for so long I forget the term. But yeah, the $200 redemption fee, or the fee for people get for liquidating you. So that's all built in. It just has to be $2,000 total, all built into that.
Oh, that's where the 2,000 came from. Just a threshold.
It came from Liquidity because basically the protocol is a fork of Liquidity on Ethereum. They developed it, and because of the price of gas fees on Ethereum, I think that's why they came up with the $2,000 minimum, because they didn't know what the price of gas was going to be. So $2,000 was the price at the point that they came up with to make it worthwhile to take out a loan, to open up. They call them a trove over there, but we call it a vault.
Now, if I made the initial, put my Pulse in, settled on my ratio or my loan to value percentage, I've minted my USDL, I have met the 2,000 minimum obligation. When I come in with more Pulse, do I have to also meet another 2,000 minimum threshold, or I've now met it and I can just keep topping up on top of it?
No,
Does that make sense?
You can add or remove Pulse from your vault at any time. You don't have to open a new vault. You can open multiple vaults. That would require another 2,000. But if you want to just add, you can. And if you want to remove it, you can as well. If you start earning like money in the pools, you can use that money to pay off debt. So if you're earning USDL by staking your loan token, you can use that to pay down your loan to increase your collateral ratio that way. Or you can top off your vault. So if your vault's getting close to, like, you always want to be above 150. 110 is the liquidation point. But if the system ever goes, under 150, you're safe if you're above 150 because it won't go into the alert mode. What the heck's it called? Oh my god! It's been so long since we talked about this. Recovery.
In my scenario, let's say I do put in 100 million Pulse worth $4,000. I want a 200% loan to value. I've met my 2,000 threshold. The reality is that as the price of Pulse increases, and let's say I've done nothing, I've touched nothing, then that loan to value ratio could become 200%, 300%, 2,000%, 200,000%.
That increases the collateral ratio, your debt stays the same, so your ratio goes up, and you can either mint more USDL as a loan, or you can remove that Pulse if you want. But I mean, if you mint it as a loan, the advantages of the theory behind it is a loan is not taxable. So obviously check with your own tax professionals, but loans, like if you borrow money from your 401k or you borrow money from the bank, they don't tax you on that. That's how the rich get richer. They borrow from their assets, they collateralize them.
Let's explore that, and then you can cut me off when if we hit a point where we're not going to go there. So I understand that a loan is not taxable. Paying back a loan is not taxable. But once I've got USDL in my hands and I'm now trading it possibly for a USDC to exit to fiat, or maybe I'm buying more loan tokens with it. No matter what I do with it, at the point I start swapping USDL for another coin, so it's a coin to coin, isn't that a taxable event? Though, even though your initial borrow wasn't, now downstream from that, I'm actually using that coin to purchase or swap other coins or exit to fiat. Is that a taxable event, or does your initial grace follow you?
Again, just to cover everything, you would need to check with a tax professional in the country and jurisdiction you're in. But if you have $1,000 of USDL and you swap it for $1,000 of USDC or DAI or whatever, what's your net gain or net loss on it? Zero. So yeah, maybe it's a taxable event. You can report it.
You're right.
The net gain is zero.
You're right. It's a stable, and stable is capital neutral, basically.
So they might want you to report it, but if you do that and you report it, it's a now if you made money on it, if you made any gains on that. So if you went from USDL $1,000, then you swapped it for Ethereum, and then your Ethereum at whatever price point you went up $100 in value. Then when you sell that Ethereum, you made gains on that. So you would have to report that.
No. That's how it works right across the board. But you're right. And unless it's depegged 80 cents on the dollar or some wild variation like that, you're right. It's a reportable event. It's a taxable event, but it's neutral in terms of a gain or a loss. Okay, very good, very good.
Right. That's how we've always explained it. I mean, obviously, you got to check with your accountant. I don't know. Crypto is still so new. Like a lot of CPAs don't even know how to report crypto.
They have
honestly.
no clue.
Here's an anecdote. Coin Tracker, which is what I use. If you went from USDC to USDL, even though it's not like taxable, like it's like a stable coin, it would be like a 1 penny. Just because the software can't deal with like zero, it is literally like an accounting thing.
Right.
Yeah.
Right.
Like, when you go from one to another, what's your taxable? Well, zero, really, but some software can't deal with zero. I can't deal with less than a penny. So sometimes you're like, okay, I'll make it a penny because, I have to get this thing, I have to pay my taxes, and I need to actually function inside the software. And that's not
when
even
you add up all the pennies,
that's using the software,
up to 10
right?
cents, right? When you add up all those are just rounding errors, basically, right? But I was going to give you a funny anecdote. Last year, I was shopping for a new person to do my taxes. And because I'm now into crypto, I was asking them, hey, do you know about crypto? And in turn, they wanted me as a client because they didn't know anything about crypto and were wanting to use me as hey, I want to do your taxes and I want to learn from you. I want to learn about this crypto thing. And then when I went to their offices and sat down with them, well, we burn the coins and then we're going to mint the rewards when I end the stake, right? Or, well, I'm sacrificing for free speech, right? But I may get zero value or airdrop coins, right? So the story we all know, they couldn't get me out of their office fast enough. It's like, what? It was like I was talking from another planet. And it's like, well, tell you what, why don't you come back when crypto's a little bit more stable? They cannot wrap their minds around what this does. Even one of them, one lady, she was the most open-minded of them. When I walked her through how hex staking works, she stuck with me and basically kind of cut through it and said, sounds like interest. I said, okay, yeah, let's just call it interest, right? And then run that into the tax equation. So just a little funny story regarding your CPA or tax preparer.
Yeah, I mean, Richard used to have it as interest on the website, and then everybody convinced him to change it to yield because of Muslim laws. And technically, it's yield.
Now he's changed it to mining, hasn't he? Or it's his third evolution?
He calls it mining now instead of staking. Staking went to mining. That's what he calls it. Interest became yield, but you're not earning in dollars. You're earning in hex. So it doesn't mean it's going up in value. You're just getting more hex too. Yeah.
What my third? That was three of them that I went through, and the third one was a lady, and she was the most open-minded, and she could kind of see that it was interest, right? Or she basically said it sounds like the functional equivalent to interest. You put some money in, you wait a period of time, more comes out, and then her thing was, even though it's coming out in these things called hex units, we need to find a fair market value for those units on that day. And that's what we'll call, the interest value. But anyhow, I don't want to get too far down the road. Consult your, hashtag not tax advice. But interesting story. Okay, hey, can I go back then? So basically, once you've borrowed and price of Pulse is going up, you can be paying back the loan. You can be minting more USDL. No, well, explain that piece of it again.
Yeah, if the same amount of Pulse goes up in value, so Pulse goes from $1 to $10, you view a 10x. So does your collateral ratio. So it gives you more buying power. Your debt stays the same, but your borrowing power goes up. So you can just mint more USDL and, adjust your collateral ratio however you want. And then if you want to pay it back, that would be either you would actually use the stability pool, the staking pool that you have your loan token in, that would earn you USDL. When people take loans out, the fees go to the people that are have their loan token, and then you could use that USDL to pay down your debt. So you just return it, you pay down the debt, and that would increase your collateral ratio as well because your debt goes down. You just always have that $2,000 minimum in the vault.
And the borrowing is not a tax event, and neither is the paying back a tax event, if I understand correctly. Correct.
But one thing you would keep in mind is if you are liquidated, that could be a taxable event in your jurisdiction because technically you're losing the asset. If you have a loan out and people ask you, well, how do I know this is a loan? You can go to the Block Explorer and you can print that out and show them, look, my assets are tied up in this contract. I still have them. If I pay this loan back, I get my Pulse back. So that's how you validate that it's technically is a loan that is not taxable. But if you get liquidated, you can't go on the Block Explorer and show that you have that Pulse anymore. You lost it. So that in that scenario, that would count technically as a sale in most jurisdictions, unless you live in
a deemed disposition, and it would find a fair market value on the day that you got liquidated. Yeah. I don't know. Is everybody paying attention to these things and being careful and not just jumping in? I mean, there's a lot of considerations here.
Yeah, when the first year and a half was up, we were talking about this stuff constantly. And then we were just all waiting for Pulsechain to come. And then you can go look up metrics on liquidity, which is the main fork from this, the main protocol that all the other ones forked from. So you can go look at the history and stuff. But the stable over there, like LUSD, is very, very stable over the long term stable coin, and it's because of the way the system is, and it's truly DeFi. Nobody can pull it and rug it. No money goes to any of the founders once the protocol is live. It all goes to the people that use the protocol. So people that are participating in the staking pool and the stability pool, all the rewards go to them.
Did you guys fork it one-to-one functionality, or have you added some features here?
Better marketing, a lot more education. I think if you go look at like the YouTube videos that are out, and
Yep.
the all the stuff Walrus talks about,
Yep.
the website. So, but otherwise, pretty much everything is still the same. So it's the same $2,000, just different contracts for the tokens. Yeah, everything else is still the same. Yeah.
Are you going to get some traction because cheaper gas fees over here? Is that going to be also work to your benefit, or to not to your benefit, but to the protocol's benefit?
Yeah, that's the idea of a pulse chain in general, right? So, they went to the founders of Liquidity and asked them if they were going to fork it on the pulse chain, and they said no. So they had those conversations and things, but
if you won't, we will.
Well, if they're not going to do it, other people will. So, but yeah, it's a really, really amazing piece of DeFi that they put out and they designed. So,
what's the what would a sense of the user base and user activity there? Are we going to dwarf it because we're a larger community? What's going to happen in terms of users? Do we have a very captive audience here? If you're following Richard, right? Hexagons now becoming Pulsechans, now becoming part of this ecosystem. Do you anticipate dwarfing their user base, or at least trying to catch up?
I hope so. If I could predict the future, I'd be buying all my money in Pulse right now. So, that's the idea, though.
To be honest, I never heard of Liquidity. I heard it when you guys first came out. I sacrificed. I've been following events, not as intense as I should, but in the last few weeks, it's been ramping up. And, I kind of represent has been asleep and now waking up and has all kinds of questions, and most of them are answered, and there'll be another 100 like me right behind me in the next couple of weeks. But I never heard of Liquidity, never, nothing. I wasn't even inquisitive enough to go see what it does. It just sounded like another knockoff of Aave. Okay, they got Aave, they got Liquidity, and I didn't really even give a shit. Okay, one's coming to my territory called Liquidity with these give you good points on marketing with faces I know and people that I trust, and so in my backyard. So I'm kind of pumped up about what's happening here. But in terms of Liquidity, who Liquidity what?
I'm the same. I never heard of it either until I got involved over here in the app and everything. But it's once you dive deep into it, I guess it just was a really smart guys that just didn't know how to market it very well. Maybe that's it. Like, it just kind of stayed in the Ethereum community. They do have a lot of usage over there, but I don't know. Crypto in general is hard to market, especially in the bear market. I myself have stepped away just because it's hard to follow this stuff all the time when it's not going anywhere. So it's still the best thing you can just pay attention, like live your life and just hold and, invest in the things that you believe in and that you verify and you validate, and just hope to get out of this market when the economy comes back. And, you got an election year next year. I think that'll change things. So now's the time to accumulate. There's blood in the streets.
Their stablecoin is LUSD, right?
They call it LUSD. Yep.
LUSD. Okay. What is the equivalent of their loan token, or do they kick out a loan token or loan equivalent token in their?
It's LQTY, I believe.
LQTY.
You have to know this off the
Liquidity.
back of my hand.
Oh, Liquidity. Duh. Let's see what that puppy trades for. LQTY. So we can get a sense of what loan may. Oh, look at that. 91 cents. 91.93. Let's see what its all-time high was.
Because we're in a bear market, so everything.
Yeah. Well, it did come out of the chute aggressive and then fall off the face of the earth like the Ink token did, but it came out and peaked at $48 in the first 30-40 days, and is bear market 98% retraced down to 92. So
one thing about they went through like an ICO and like an offering before. So once that went live, users a lot of them just dumped, because that's what happens when protocols go live. A lot of them just dump. It's in liquid loans, people were incentivized to stake, whether it be 1 month all the way up to 24 months, and 60% of the loan token is locked for 2 years. So
hold on. Okay, hold on. Walk me back. So this was during the sacrifice. If you chose the option to stake or lock longer pays
Mhm.
better. Okay, so
Mhm.
folks did that, and so that's going to you've got a metric on that. 60% of the sacrifice went that
There's
way.
a video that CC put out, and they've said it before. But CC has one of the videos in Liquid Loan Channel, but it's above 60. I don't know if it was 63 or
Okay.
66,
All
but
right.
60% of the loan token is locked for a full 2 years.
All right, so that shows a level of commitment. They won't be able to dump. Okay, now the remaining 40%, I'm guessing we're going to go through a little bit like Ink did, shoot up. Oh my God, look at this. Money, free money, and then we're going to crash back down to reality.
Yeah, I mean, there's going to be buying opportunities right away. I mean, whenever you can get into a protocol right away and try to get that first market mover, you can usually earn a lot really quick. So whenever it goes live, I try to get in there and start using those pools. As soon as possible. It'll balance out quick. Just like
I can tell you from firsthand experience, those people in the early hours of Pulsex go live, right? The very early hours, like we're talking the first 4 hours, the next 8 hours, the next 12 hours. You could be 20-30% of that pool, right? And then as the herd caught wind and was starting to wrap its mind around it, right? Now you go in there, you're like 0.00004% of the pool. But in those very early moments, you could be a significant percentage of those pools. So I'm giving away a little alpha here, but
there's people that got wrecked too. But like, you're absolutely right, and a lot more people know about it now. There's a reason why everybody tells you to go out and use testnet. It's not just go, oh, look how nice it is, and look at the how it's set up. But they want you to practice, so you don't have to sit there and try to figure it out. You need to make it second nature, so when that first
he had a little caveat to his video, which was not only get out there, not only use the tour, not only practice, but for the early adopters, there's going to be those early opportunities. Don't miss out.
Yeah, absolutely. I made a long time ago. I made like a spreadsheet calculator. I don't know if you ever use it. I'll trigger it in the chat. But if you want to use that, you can use it to like game plan for like taking loans. You just put in the amount of pulse, the amount of whatever expected value you think it is, and then you can mess around. It'll tell you different ratios and how much you need. Obviously, the protocol itself will do that for you if you actually go in. It tells that live when you like move the numbers around. But this is before we actually had the testnet up. So some people like using the spreadsheet.
So you come up with a spreadsheet that kind of models. You
can
play what if.
It's pretty simple and straightforward. But it just you just enter the amount of pulse you want. The expected value. So if you want it to be 0.003, and then how much of a loan you want to take. If you try to take a loan less than $2,000 of value of pulse, it won't work. It'll just say to enter a higher number. And then once you put it in, you can see different ratios for like 200, 300, 400, 500% collateralization. I don't know what the average is.
You should get that up on a website like the hexcalc.net boys did, where you can go play what if on hex stakes.
Yeah, we always had it in the Telegram group. I think I shared it on my Twitter, but I don't know if there might have been a calculator on the Liquid Loan site. I don't remember.
Because that hexcalc.net is a fantastic onboarding tool. It's actually the first place I start, right? Once I've conceptualized what Hex is about. Oh yeah, really? What can you do? And then I bring them to the screen and go, okay, how much do you want to put in? What's it worth? How many days do you want to do? Hit a button and look at that. You could really get that. Hey, we can get more. The longer you go, the more. Show me how you do that. And I, take it from 365 days to 2 years to 3 years, and then they see all the numbers and they're like, oh my God. They actually think that the Hex Calc website is Hex. I'm like, no, it's just a tool. It's just a play tool.
Yeah. I triggered you can Dune Analytics. I triggered it in the chat too. It has a link to Ethereum Liquidity's protocols just to see what they've done over a lifetime. So like last week for LQTY, which is their loan token version, it's 24.2%. Last month was 12.8%. All-time average 61.5%. For a protocol that's like 2.5 years old, that's pretty good. They also have LUSD.
Did you just put that link in the main chat, or did I miss it?
It's in main chat. It should say if you type !Dune, that'll trigger it.
Exclamation! Oh, somebody just did.
It was me. I don't know if you've ever seen the menu list. If you do !Pasta, I'll type it now. That gives all the triggers.
Oh, these are all the different tools that you can use, or are they just informational?
Sometimes they're informational. Some of them take you to tools. Some of them take you to explanations of things. Some of them take you to testnet.
So-
Some are better than others.
Exclamation pasta gets you the whole list, and then the one you're recommending right now for what ifing on the loans is Dune. Okay, let me do that.
Dune Analytics. You can use it for all different, crypto. But this was the one off of Liquidity's website that we used to like trigger just to show what could be possible for loan token or USDL.
Okay, so where's the spreadsheet itself where you can
that's
type
iCalc. Or I'm sorry, exclamation point calc. I triggered it right just
Calc.
before.
All right, calc.
It'll take you to the link. It's like pinned somewhere in the chat.
All right, and you know what, guys? I don't mean to be tying up the voice chat. It was a little bit of dead air, so I thought I'd chime in. And how many? 16 of us. If you're all in the same boat I am, or getting anything out of it, I'll keep talking until you shut me up.
It's all good. I haven't been in chat in months, so it's all good.
iCalc.
Was the release date mentioned yet?
I mean, I know as much as you do. October.
October.
That's all
Okay,
I
cool. I thought I saw something in chat about a release date soon. So I just
CC. If you go check that on Twitter or the Liquid Loans webpage, CC put like a 1 minute video out. They're planning to launch in October.
Oh, awesome, cool. Thank you very much.
Can I add to that? Not that I'm part of the team. I'm just a hanger on here. Earlier, Walrus hinted more in the second half than the first half. Hinted.
Expect later.
No expectations.